Hi everyone and welcome back to the channel, and today we are going to be talking about a new mortgage product that is specifically aimed at helping first-time buyers borrow more. Let's look into it. So the product itself is the Nationwide Helping Hand Mortgage. Now you may remember I done a video about this a couple of years ago in a previous iteration of this sort of product, but Nationwide as of the 26th of June 2025 have released a new one which is called the Helping Hand Mortgage and allows you to borrow up to an additional 33%. So rather than doing 4.5 times your annual income or joint annual income, they are now increasing this to 6 times. Now this is for new build purchases only, and it does include flats as well. But for flats, the loan to value is a maximum of 85%, whereas if you're buying a freehold new build property, that goes up to 95%, thus allowing you, a first time buyer, to get a 95% mortgage on 6 times your joint income. Now, a little caveat: to be a first-time buyer with Nationwide, you need to not have had a mortgage in the last 3 years. So if you're buying with somebody else, you both mustn't have had a mortgage in the last 3 years. And the definition of a first-time buyer will vary from lender to lender, so do look at the small print in any mortgage products you do look to get. Unfortunately, if you are a first-time buyer who's self-employed or looking to do the right to buy or some shared ownership scheme, this will not be for you, as Nationwide do not allow it. Now let's look at the pros of this Nationwide Helping Hand Mortgage. So the main one is really that you can extend your borrowing by up to 33%. Now, new builds are notoriously known for being higher priced than pre-owned homes. So that 33% extra borrowing power can really help bridge that gap between what you can originally afford and what the new build house or flat is actually on the market for. And this could potentially open up a number of doors or extra doors for properties that you could now be able to afford. The next pro is that the product actually has a low deposit amount. So you only need a 5% deposit in order to be able to qualify for this mortgage, along with all the other criteria. But it just means that if you are able to scrape some money together, 5% together, then the prospect of affording your first home or buying your first home, new build first home, is slightly closer in reach. There's also a little perk with this one. Now, you know how banks like taking money from us. With this mortgage product, they do offer a £500 cashback, which could be very appealing to a lot of people. Getting 500 quid on completion to, I don't know, get a takeaway with on your first night in there, or some essentials that you may have forgotten to purchase, or a big telly. But yeah, so that is one of the pros, is that you do get £500 cash back, which every little helps, as the advert goes. You also have the flexibility of overpaying up to 10% of your mortgage each year without any early repayment charge. But I think this is quite a common thing with most mortgage products, but good to know this is also the same with this one as well. Now, financial security is something that we're all looking to try and achieve in these crazy monetary times that we find ourselves living in. And one of the criteria for this mortgage is that you have to pick a 5 or 10 year product. That is going to give you the certainty of what your mortgage payment is for the next 5 or 10 years. No matter what happens in the mortgage world with interest rates, you know what your minimum payment will be for your mortgage for 5 to 10 years. Now, as this is aimed at new build properties and they obviously have to be built, Nationwide have extended how long their mortgage offer lasts for from 6 months to 9 months. That mortgage application, that mortgage offer, is going to last an extra 3 months than what it did have, to give the builder time to build your home, you to go over any snags, and to get the conveyancing process all done and dusted. So extended mortgage offer time to 9 months, in my opinion, is a really good thing. Now let's look at a few of the cons, because although I'm an estate agent and I love things that help people buy properties, there are some cons to this as well. The first one being the very, very strict eligibility criteria. You need to be a first-time buyer that hasn't had a mortgage in the last 3 years. That is you and anybody you're buying with. So if anybody's had a mortgage in 3 years, you would not qualify for this mortgage, unfortunately. It also excludes anybody who is self-employed, which is quite a lot of people, and anybody who's looking to buy on a shared ownership or a right to buy scheme. This mortgage comes with option of a 5 or 10 year fixed rate mortgage. So that is going to absolutely limit the amount of options there are in terms of interest rates, etc. So you could have a 5 year fix or a 10 year fix, but that is going to give you certainty for those those years. However, if we do start seeing mortgage rates drop, then unless you're going to exit that mortgage and pay an early redemption fee, you are stuck on that higher fee. As this product is only for new build properties, you must be wary of the new build premium. When you're buying a new build property, it will be more expensive than the equivalent property that is pre-owned. If you go on any development that's being built at the moment, there will always be some people who are already looking to sell. And if you compare that price to the new build price of the one that you're looking at, I guarantee it will be less money. As soon as you own that property, then the value decreases straight away. Unless you bought a new build property in 2018-19 and sold in 2022, the summer of 2022, you're probably going to lose money if you look to sell your property in the first 3 to 5 years. This leads us nicely onto negative equity, maybe the wrong word, nicely. But if you are only using a 5% deposit to buy a new build property, it doesn't give you much wiggle room in terms of potentially going into negative equity. You only really have a 5% buffer if you are only putting 5% deposit down in property price movement. So if it does go down by more than 5% before you're looking to sell or remortgage, then technically you would be in negative equity, and that's somewhere where nobody really wants to be. This could make it extremely difficult to remortgage after that 5 or 10 years, most probably the 5 years, and also hard to sell if you need to sell the property for a certain amount of money to pay off your mortgage. So just bear that in mind, guys. So this summary is basically my opinion on this mortgage product. It is not financial advice or anything like that. So please do speak to a mortgage broker or financial advisor. But let's quickly just go over what I see are the cons and the pros and cons in a quick summary. So cons are, you are going to be able to borrow more money if you're buying a new build property. You've also got your mortgage offer extended to 9 months rather than 6 months, and the lower deposit requirement may mean that you can start buying your first home sooner. Now the cons, you've got to tie yourself into a 5 or 10 year fixed rate mortgage. You're buying at an already inflated price. You've also got to worry about the risk of negative equity if those prices do come down by more than 5%. And you've got the whole, what's the word I want to look for? Stigma with new builds. They're not always the best built properties, and that will vary from builder to builder. So what are your thoughts on Nationwide's Helping Hand mortgage? Is it going to help you buy your first new build property? Is it going to help you get on the ladder quicker? Is it going to benefit the property market in general? Or the cynical side of me says, is it just going to benefit the home builders? Is it going to mean that there's more people buying new builds and then they can then increase their prices even more so, thus pushing home ownership for more and more people out of reach? Let me know your thoughts. If you found this video helpful, please like and subscribe. Pop any questions in the comment section below, and I will see you again very shortly. Take care.